And it's time for the Personal Finance Corner. Dhirendra Kumar, CEO at Value Research, is on board with us. Dhirendra, hi, afternoon. Over the last 6 months, banking funds have been the worst performers. Do you see any merit in any of these funds, or should investors completely pull out?
No, as I was saying earlier, even in the boom times, when banking does well, it was able to beat the benchmark by a handsome margin. And we have seen the whole economic turnaround, or the outlook for that has changed completely over the past couple of months. And that has led to, and it is showing in the performance of the banks. Banks are faced with a very unusual situation of rising non-performing asset, the rise in deposit rate, and so that can actually that can impair the quality of the bank revenues. So it in an economic turnaround of the nasty kind, banks are the first to act to feel the pinch, and that is what is showing. That is why when it comes to mutual funds and where individual investors invest, they should diversify. But I would say that if you invested in the good times, and if you are caught in this mire of banking funds decline, then don't pull out right now. Because if you pull out, you will be squaring up your losses. If it is a part of your portfolio, by all means continue investing so that you are able to average it through. Because these times will certainly last, but will not last forever. And if you are extremely upset with this decline, then what can I say? You should not have invested in the first place.
Dhirendra, pulling out now might not be the best idea. Then when do you expect us to have an opportunity to pull out next? What's your view?
No, I would say that one should, if you are an investor who is investing regularly, because I know a large number of investors have done their SIPs in FMCG funds and banking funds. They should by all means be continuing. But if you are trying to ride the momentum and you are caught on the wrong foot, and basically you are a trader in a mutual fund, square up your losses, move on.
Dhirendra, we've got a query as well coming in from Satish, and he is looking to invest about 10,000 rupees per month in mutual funds. He wants you to suggest funds that he can generate over at least 14% returns in the next 5 years.
I think in the next 5 years, if the markets turn around marginally, I think most equity funds will be able to provide return upward of 14%. That's my hope, because we have seen that last 4 or 5 years the market has struggled. A lot of companies have been able to broaden their base, and they are grossly undervalued. So whenever the turnaround comes, but I don't know when. So I would suggest that if you have over 5-year time frame, approach it conservatively, and it is very unlikely that on a 5-year basis investing regularly I'm not any of these funds or anything to do with equity, you are unlikely to get any kind of guaranteed return. If you want guaranteed return, consider your recurring deposit. But if you can negotiate with 8% return or 15% return, or of course 15% won't be a problem, then consider a balanced fund. I think they look very promising. Consider 1 or 2 balanced fund, invest regularly.